afternoon. Oh, I should actually say good morning, everyone. It is Sunday, the 20th of September, 2020. It is just going on nearly 10:30 in the morning. And I'm having a look at the major currencies, obviously the US dollar index, and having a look at what major news, high impact news is out this week. And so there's a couple of things I just want to observe. There's obviously, we've got out of the US, we've got Powell speaking, and it's several times. Okay, so he's speaking on Monday, he's speaking on Tuesday, he's speaking on Wednesday, and he's also speaking on Thursday. So just because, so clearly the US dollar is very much kind of in play this week in terms of volatility. In terms of which way it's ultimately going to end up going, I'll have a look at the charts and see which way probabilities imply that it's going to go. But that's it. There's really not much outside that. Also, what I'm always aware of course, is any of the Kiwi, anything to do with the potential rate statement or anything like that can definitely introduce some extreme volatility on New Zealand pairs. And that's really it. There's nothing else that I don't think, well, I don't think anything that's going to introduce any extreme volatility, certainly for intraday traders on the lower time frame, sort of sub 4 hours down around 30 minutes to 1 hour. Almost any of this is really going to create some sort of minor spikes. But that's really it. So there's nothing here that really kind of sets any alarm bells going, other than just some awareness of it's. I'd be very surprised that the US dollar can go through this entire week without any volatility at all, just because of various reasons. Because of the Fed speaking every day, plus obviously as we near the US elections, there's just general tensions are running high. So there we go. Let's go and have a look at the charts. So looking at the dollar index, and so last week my expectation was to see that US dollar strengthen. We kind of saw it head up towards 93.70 towards Thursday, and then finish lower by the end of day Thursday. And so there was a little bit of a bounce off this. So effectively it was the bullish divergence on the daily here. Then price breaking up, coming back, producing a sort of bullish test of that previous level of weekly, at least that weekly level, and then sort of vaguely kind of off, not a really solid move to move up, and finishing with quite a bearish candle there. So it really didn't follow through as strong. I still kind of was like, okay, well, I'd like to see this head up towards 94 at a minimum. It still hasn't really been able to do that. It has actually finished with a bearish candle. Just noting that, closing just below that 93 level. If I look on the weekly, we've got that weekly downtrend. We also now, and I think this is worth mentioning, also now have price having retraced on the weekly, which is really essentially what I wanted it to do, and has now finished up with a bearish candle on the weekly. So this is what I'm going to be looking for. This is essentially what I wanted. I was at the time originally, the moving averages were up here, and I was looking for price to do a deeper retracement. But now that it has connected with the moving averages, this is a point of equilibrium where the trend is naturally welcome to resume, if that's going to be the case. And so this is the first thing I'm really going to be looking for. Plan A for me this week is to see the US dollar actually break the low of this bearish candle to follow through if it's going to resume that trend. If it fails to do that and actually breaks the high before it breaks the low, then I'll be looking for that as a continuation. But right now there's actually subtle indications showing that the US dollar has done enough of a retracement, and it's now pretty much ready to resume. If I look at it on a monthly basis, it actually looks as though it's pretty much kind of sitting down at sort of a weekly support resistance level, and has produced a bullish candle. So again, there's always that mixed, well, not always, we've recently had a lot of it, mixed signals, overextended on the monthly, producing a bullish candle, a break of the high of which before we're close 10 days out from the end of the month, we could see this becoming a retracement, coming up to test 95. So if I had to take all of that into account, it really says to me that if we still have to go to the end of the month, close as a bullish candle, and then potentially go up. So it just means that for the next 3 to 4 weeks, sort of the medium-term future, heading higher is still very much in play, but in the shorter term, it's leaning more towards a move to the downside. Okay, so my first, as I said, so my plan A this week is to see a break of the low of the weekly candle, which is going to be 92.77. All right, which puts us actually at the lows over here, 92.77, to potentially start looking for moves to the downside. That would imply that the euro dollar is going to continue to climb to the upside. All right, so moving across to that, and also at the same time, as I said, a sort of a medium-term idea that, so we're still basically, there's this kind of mixed thing, but at this point, it's now 60-40 that it's actually looking as though it wants to continue. So I'm going to be prepared for both. All right, so the fact of the matter is that the market has been going, what is wrong with me? Been going sideways predominantly for a while. And this has been due, in my opinion, due to the need for a weekly retracement. We've now kind of effectively done that. The market has treaded water. It's now getting ready to continue on upwards. It is a little bit overextended on the monthly, but not ridiculously so. And so a potential retracement on the monthly is still on the cards, a little bit further down the road, but not necessarily immediately. So again, my first kind of thing that I'm going to be looking for here is a break of the high of the weekly candle first, to see if the market is going to head up towards 1.2. If it breaks the low first, then I'll be looking for that deeper retracement. But I'm leaning sort of 60-40 for it breaking to the upside first. Looking at sterling, sterling has actually done a much deeper retracement on the daily. It's actually come back into previous support and produced a bearish candle. This is potentially a swing area, so this is a setup on the daily as a potential swing, but there's no confirmed downtrend, which means that this would be the beginning of a confirmed downtrend. If we did, we are also at a level of weekly support and resistance, producing a bullish candle in an uptrend. So a break of the high of this on the weekly implies that the weekly is going to continue upwards, which supports the idea of a stronger pound, weaker US dollar. At the same time, a continuation of this back down to these levels means that we're going to continue to see that US dollar strengthen. So again, there's that contradiction. We're also within a range on the monthly. Here at the top of that range, producing a bearish candle, which generally speaking is an indication of the potential for it to head back down, which supports again the idea of a stronger US dollar, certainly a weaker GBP. Moving on to the Australian dollar against US dollar, generally the flow of this is pretty much to the upside. There was actually a small trade to the upside up towards this level of 73.50, and price is now waffling again. Even here, that weekly chart having done a very minor retracement. Overall, the Australian dollar relatively strong, just in the same way that GBP is quite weak. The Aussie dollar is slightly stronger in this respect. It has also had a very strong run up, producing a potential bearish candle. So I think more clarity on what's going to happen on the monthly will obviously start to build up as we go towards the close of the monthly candle, which is over the next 10 days. But in the meantime, and certainly in sort of in the immediate future, what I'm looking for here is certainly to see this, expect to see this kind of continue to head up to do this, which supports that idea of that stronger US dollar, at least initially. Now, Kiwi dollar's got a slightly different kind of message that it's sending out here. It's showing some potential sort of shorter term resistance here, nice old bearish candle of that. MACD, all of this is sort of slightly bearish divergent. It's a little bit weak. I think based on the previous bullish candle, that just being a Friday candle, the market is probably still going to attempt to try to climb a little bit higher. That weekly still looks pretty good, but it's definitely starting to run out of steam in this area. Looks good on the monthly. So again, that supports the idea of a slightly stronger Kiwi, slightly weaker US dollar. All right, then having a look at dollar yen. Dollar yen now really starting to test that 104.50 level, starting to imply it wants to break out to the downside. Doesn't mean that they can't come in at the last minute, or at least and the bulls come in and actually push this back from this level, but certainly the price action looks much more bearish than bullish. So this week there might be some good opportunities on this. If it does break below this and decide to head down towards that 101 level, if that's going to be the case, there could be some really nice strong moves. It's a bit overextended here, so at some point it is definitely going to need to come back up, and that could either be above this level, or if it does break through to pull back to this level, there could be some shorting opportunities there. So to me, that's very interesting, because for a very long time they've been kind of creeping sideways, and it's interesting to see them starting to head towards that the low of the larger range. Right, then having a look at dollar Swissy. Dollar Swissy's got a similar type of thing to dollar yen as well. Big overextended on the monthly, producing a bullish candle at monthly support and resistance. Could produce a swing low, but again, I need to see that towards the end of, closer towards the end of the session, that monthly session, and the weekly having now retraced. I have to wait and see here, because there is no clarity. It is not really due for retracement here, and it could potentially just go sideways and consolidate. The daily has no clear trend. It has got a higher low. So certainly it appears as though what it wants to do is attempt to test a little bit higher, but again, it's not, certainly doesn't seem to be showing any immediate money-making opportunities. And then having a look here, finishing off with dollar CAD. So dollar CAD has come all the way down as well, just showing a lot of that weakness in that US dollar, Canadian dollar here, also producing that bullish candle on a monthly level of support. A very nice looking weekly downtrend, which is potentially capable of continuing lower. So by looking at the weekly in isolation, all of these imply healthy trends, which implies the probability is that they're likely to do more of the same that they've been doing for the last couple of weeks at any rate, which means that we'll see a continuation of the weaker US dollar. That's when I look at the when I look at the weekly in isolation on pretty much all of these. They all look very much as though they have the intention of continuing the way they are. If I look at the monthly, it's a little bit overextended, and if I look at the daily, there's some have the same sort of signals as the weekly and some have contradicting ones. So I think based off that, it just means that I'll lean towards what the weekly is saying and then just keep an eye on that daily. Does the daily decide that it wants to break away from that weekly trend? And be prepared for that, and really that will focus on the weekly candle. Do we break the high of the weekly or the low of the weekly candle, which will be an implication, and especially if it happens across multiple pairs on around about the same time, that would be a shift in the US dollar, and then that would imply what is likely to happen. So I'll be trading with some sensibility. I think that there is a general lack of clarity, so to me I regard this as higher risk trading. There aren't any really strong established trends of multiple time frames. There are conflicting signals between different time frames, and that's where the additional risk is coming from.